Dear friends, today we stand at a pivotal moment in global trade history. Over the past 3 weeks, starting from April 2nd, 2025, the United States and China have engaged in an unprecedented escalation of tariffs, profoundly impacting international markets and economies worldwide. Let us dive into these dynamics with the inputs from Dr. V.V.L.N.Sastry, jurist, financial economist, international arbitrator, and Fulbright scholar. My name is Bharat, an AI assistant of Dr. V.V.L.N.Sastry. The escalation of tariffs, a timeline. On April 2nd, 2025, President Donald Trump initiated a sweeping trade policy, imposing a 10% baseline tariff on nearly all imports under the International Emergency Economic Powers Act. This move aimed to address persistent trade imbalances and alleged unfair practices by trading partners. In response, China retaliated by imposing a 34% tariff on all U.S. imports, effective April 10th. President Trump, undeterred, escalated the U.S. tariff on Chinese goods to 125% on April 9th. The following day, the White House clarified that the tariff rate had risen to 145% due to cumulative duties stacking on top of existing ones. China responded in kind, raising tariffs on U.S. goods from 84% to 125%, effective April 12th. Beijing dismissed further U.S. tariff hikes as a joke, signaling a firm stance against additional trade measures. Market reactions, a roller coaster ride. The immediate aftermath of these announcements saw significant volatility in global markets. The S&P 500 experienced its largest single-day gain since 2008, surging 9.5% on April 9th, following President Trump's announcement of a 90-day pause on most new tariffs, excluding those on China. However, the relief was short-lived. The US dollar weakened nearly 10% from its January peak to a 3-year low against major currencies, influenced largely by the tariffs and inflation concerns. This depreciation made U.S. exports more competitive, but also increased import costs, contributing to inflationary pressures. Commodity markets mirrored this volatility. Gold prices surged past $3,300 per ounce as investors sought safe haven assets amid trade uncertainties. Conversely, oil prices fell below $60 per barrel amid fears of reduced demand due to a potential global economic slowdown. Sectoral impacts. From aerospace to pharmaceuticals, the aerospace industry has been notably affected. A Boeing 737 MAX jet destined for Xiamen Airlines in China was returned to the U.S. due to the escalating tariffs, highlighting the impact on the aerospace industry. Pharmaceutical companies have also felt the sting. Popular U.S.-made drugs for cancer, diabetes, and other conditions now face steep tariffs in China, potentially leading to higher prices and limited availability for Chinese consumers. Global trade dynamics, shifting alliances, and strategies. China has sought to diversify its trade relationships, with exports to Southeast Asia, Africa, and India seeing significant growth. Chinese President Xi Jinping is actively engaging with leaders from these regions to strengthen economic ties and mitigate the impact of U.S. tariffs. Simultaneously, the European Union has expressed concerns over the U.S. trade policies. President Xi has urged the EU to unite against what he termed unilateral bullying, advocating for cooperative resistance against U.S. trade tactics. Looking ahead, a fragile path to resolution. As we look to the future, the path remains uncertain. President Trump has indicated a willingness to engage in negotiations, emphasizing the importance of balancing trade measures to ensure continued consumer demand. However, China's firm stance and retaliatory measures suggest that any resolution will require significant diplomatic efforts and concessions from both sides. In conclusion, the events of the past 3 weeks have underscored the delicate balance required in international trade relations. The escalating tariffs between the US and China serve as a stark reminder of the interconnectedness of our global economy and the far-reaching consequences of protectionist policies. Let us hope that through dialogue, cooperation, and mutual respect, we can navigate this challenging period and work towards a more stable and prosperous global trade environment. I thank Dr. V.V.L.N.Sastry for these excellent inputs. Thank you for your viewing. Please like, share, and subscribe to our channel for more subject and content-driven updates.